There's a lot of talk about investor protection and protecting these folks from making poor investments, losing money. But we are now in a world where you can invest in a meme coin to your heart's content, but OpenAI and SpaceX are deemed too risky, which I think is just a bizarre, perhaps unintended outcome.
Not a dividend.
It's a tale of two Quan.
Now, your losses are on someone else's balance sheet.
Generally speaking, airdrops are kind of pointless anyways.
Unnamed trading firms who are very involved.
Alec.eth is the ultimate pun.
DeFi protocols are the antidote to this problem.
Hello, everybody. Welcome to the Chopping Block. Every couple of weeks, the four of us get together and give the industry insider's perspective on the crypto topics of the day. So quick intros. First, we got Tom, the DeFi maven and master of memes.
Hello, everyone.
Next, we got Robert, the crypto connoisseur and czar of Superstate.
Good morning, everybody.
Next, we've got Tarun, the Giga Brain and Grand Poobah at Gauntlet.
Yo.
Joining us today, we have special guest Vlad, fintech futurist and founder of Robinhood.
Greetings and salutations.
And I'm Haseeb, the head hype man at Dragonfly. We're early stage investors in crypto, but I want to caveat that nothing we say here is investment advice, legal advice, or even life advice. Please see choppingblock.xyz for more disclosures. So Vlad, you've got a lot. We've been talking about the ascent of Robinhood over the last year and a half, quite a bit on the show, but we're very excited to have you here to answer to the community what the hell is going on with Robinhood Chain. So we've had a lot of discussions about. I don't know if you're aware of how much the crypto world loves to argue about the minutia of little tiny decisions that were made by some of these individual companies that end up becoming these larger sort of melodramas within the crypto scene.
I'm familiar, yes.
You're familiar. Okay, good. Good to hear. So first question off the bat, why did you build Robinhood or decide to build Robinhood Chain as a layer 2 instead of as a layer 1?
I think this has been discussed on Twitter, as you mentioned, and someone put it well when they said that the decision's really about being an owner versus a tenant. And we thought that having our own chain ultimately gave us control over all the details end to end of operating the entire platform. And perhaps that comes at a slight cost of interoperability up front. But I think over the long run, tokenized products, including stocks and other derivatives, are going to be available on all chains. So I think developers will build bridging capabilities, and eventually the choice of primary chain will be less meaningful. But we thought upfront having one chain where we can control the entire end-to-end experience from the smart contracts to sequencer mechanics would be important.
So the question though is, so we've heard now that Stripe is building their own chain. There's been some reporting in the press, although Stripe themselves haven't confirmed it. And we now know that Circle is launching their own chain. And these two chains are going to be layer 1 blockchains. So they're going to be like Ethereum or Solana, as opposed to a layer 2, which is what Base is, and which is also what Robinhood Chain is. Does that distinction strike you as meaningful for Robinhood's goals, or it's like, whatever, as long as it works, let's just build something and get it out there for consumers to use?
I think the benefit of a layer 2 chain is it's slightly easier to have interoperability, meaning there's a lot of infrastructure already, a lot of infrastructure even built by our friends over at Off-Chain Labs who develop Arbitrum that make it so that we don't have to reinvent the wheel. Now, the argument for a layer 1 is you can actually rebuild everything from the ground up. So I don't think that it's an unreasonable option. But when we looked at it, we asked ourselves, what do we want to do right away? What are the things that maybe we want to do 2 to 3 years from now? We thought layer 2 met our requirements.
Okay. So what do you see then? The story for Robinhood's layer 2 right now is that there's going to be tokenized stocks that are going to be issued on this chain, and they're going to be tradable through Robinhood, but also tradable directly on chain. You can sort of take your tokenized stocks from Robinhood directly into the chain. Correct me if I'm getting anything wrong here. At the highest, so that's maybe what the V0, V1 of this chain looks like. At its highest aspiration, let's say, draw forward the timeline 5 years, 10 years. If Robinhood Chain is wildly successful, what does that look like? Does it become the next Ethereum, the next Solana? Are there more users on Robinhood Chain than there are on any of these other chains? Paint a picture for me.
I think first off, when we set to build the chain, we looked at the landscape, and a lot of companies were aiming to create some variant of like the number one chain for degens, right? The chains for degen space seemed very crowded, and we didn't really think we had any competitive advantage there to make a product that was
Are you
unique.
sure?
Maybe
Okay.
this is debatable, and we do have some advantage there, to your point. But I think where Robinhood's advantage is in being the place where traditional finance and crypto merge and meet. So that's why when we looked at business to business opportunities in the past, we launched Robinhood Connect, which is an on and off ramp provider. So a lot of the leading non-custodial wallets and dApp providers integrate Robinhood Connect as the best and lowest cost and most seamless way to convert your fiat into crypto and also turn it back out. So if you have crypto non-custodial, you wanted to get fiat, we provide a really easy mechanism to do that. So it's sort of like, what capabilities have we built by virtue of having one of the largest consumer retail platforms? We've gotten really good at onboarding accounts seamlessly. We've gotten really good at preventing fraud and doing those types of mechanisms. We have a wide diversity of different assets and products that we offer on the platform. And really over time, as I look at it, the goal is for any financial market, any asset, whether you want to custody it or transact in it, to be available in Robinhood in the easiest to use way. And so when we look at the chain, the thesis is really, can we make this the best chain for real world assets? And I think we can start with the assets that we already have, US stocks. You can imagine any asset that we offer on Robinhood pending regulatory maturity to eventually be available in an on-chain form for distribution, predominantly outside the US, but I think there are advantages within the US as well. And then there's certain things that actually aren't easy or really feasible today. For example, private markets that we can make available as well. And that's kind of what we demonstrated at our event in Cannes. We wanted to show that, okay, here's something that maybe you did expect, which is stock tokens for public equities, but then something you didn't expect, which is that the same technology can be used for private companies, which have thus far been really inaccessible to retail.
So you infamously were tokenizing, I believe, OpenAI and SpaceX. And there's a little bit of a kerfuffle online after you guys announced this. So I remember everybody being super bulled up. Everyone was very excited that, oh my God, Robinhood is tokenizing stocks and bringing them on chain. And now it's going to even include private companies. And then OpenAI, they tweeted something basically like, bros, this wasn't us. I don't know who owns this equity. We didn't agree with Robinhood to do this. And it's almost like, I'm curious because I don't know if Robinhood had an official response to OpenAI kind of raising their hand and saying, hey, we didn't know that this was even happening. Although it does speak to the structure that you guys are using, being able to basically take any financial asset, regardless of what it is or whether or not the company itself is privy to it, of taking it and making it tradable in real time and ownable in real time on chain. Talk us through that episode and like, how should we understand? Is this a sign that, hey, private companies want to be private and like they're going to fight back against attempts to tokenize their stocks? Do you feel like other private companies are going to be more amenable than OpenAI was? Help us understand what that looks like.
Yeah, I'll say a couple of things that I think are relevant to this. Number one, when people have tried to do this in the past, other companies try to give exposure, or there's even, Reg A Plus in the US that allows limited forms of crowdfunding. Basically, the problem has been that there's an adverse selection issue. So the companies that opt in to making their shares available to retail typically are companies that don't have a ton of other options. Now, there are exceptions. Some companies really care about it and they want retail to have access. particularly at later stages. That's been a bigger thing recently. And I could talk a little bit about what we've been seeing on our IPO access offering as well. But IPO access, we allow companies to access retail during the IPO. Great for retail customers. I think great for the companies as well. And when we launched this in 2021, we had to do a lot of work to communicate with companies the value of that. And nowadays, pretty much the best companies are coming to us and actually giving retail high allocations. So now companies are starting to see the power of having a diversified and large retail shareholder base as a constituency. So it's been an evolution. But when it comes to private companies, the adverse selection is real. I mean, if you are a company like OpenAI and SpaceX, and you basically have the freedom to raise tens of billions from private market institutional investors, they don't want to deal with the complexity a lot of times of doing anything different, particularly if it's not established or if there's not a lot of precedent. So tokenization of private companies is a new thing. Retail access for private companies is a new thing. And when you cross that with companies that have lots of options, you talk to these companies and their core business is serving their customers and creating products. They don't want to be innovators in capital markets, but we do, and we think it's a huge problem that you've got these private companies that are literally changing the world and leading their industries. It's looking like retail might not have access to them until they hit the public markets. If they do, at valuations in the hundreds of billions or maybe even trillions. So I think there's a big risk, actually, if we don't solve this problem. There's a big risk in the normal people just not accepting these technologies. And that could lead to a whole lot of societal problems that could actually thwart progress. If you feel like AI is going to, change the world and possibly lead to labor market disruption and take your job, there's one world where you don't actually own any of that. And, there can be a tendency to kind of push back against it. But if you own the AI, suddenly you're kind of like rooting for progress there. And I think we've seen that play out in the public markets. And I think it's going to play out in privates as well. That's why we care so much about retail having access.
Well, actually, one interesting thing that's kind of related, right, is Anthropic actually is doing a new round, and they are forcing all of their new investors to not use SPVs. So forget about pure retail investor, like even accredited, but not a fund is kind of being kept out. So I guess like one question I have for you is, how do you think about kind of companies not disclosing as much and that being priced differently between the private rounds and sort of like the public proxies? Because like there is sort of this weird thing, right, where like the retail investors' disclosures for the companies are actually much less than like the private investor who's getting preferred shares. And so there's kind of always some information asymmetry. How do you think like that kind of resolves itself? Because I do feel like that always seems to me like one of the biggest problems in like the derivatives for private companies type of market.
Yeah, I mean, I think that the way it typically works in private markets with these rounds that are 30 to 40x oversubscribed is if you're a SPV or some kind of institutional investor or private wealth, or you're part of the private wealth groups at these big banks and you end up getting an allocation, you're not doing a ton of diligence, right? And there can be, if you imagine a company that's 40x oversubscribed and you've got people clamoring to get into the deal, they're not going to spend time allowing each SPV participant to do deep diligence for the company. And I think for a lot of these investors, that's okay. They look at the fact that SoftBank may be investing or Altimeter or one of these top funds, and they're happy piggybacking off of that diligence. So I'm generally a big proponent of disclosure, but I think there's a lot of people that would say, I understand the risk. I'm willing to take it. I use ChatGPT as a product, or I'm aware of the space industry. I see the publicly available information. And I fully understand that, it's theoretically possible that this investment can go to zero, and I want to make it anyway. And I think as a believer in free markets, I think people should be allowed to make that decision for themselves. And, in the US, where we have accreditation standards, we've been pushing for some reform there. And I think a lot of the basis for these types of accreditation rules are antiquated. They're pre-internet. It's really when there wasn't a ton of information available about these companies. Now you have AI and you have a ton of information out there, easily accessible on social media. And we have the tools to digest it and make sense of it. And so I think they have to be revisited, and it should go much more toward a disclosure, self-certification regime. Because again, if you also have to impose restrictions on companies to do idiosyncratic things for retail shareholders, then the risk is they don't want to do that. And they're happy just like dealing with very concentrated small set of large money managers. And you end up with the same problem that we set out trying to solve in the first place.
Totally. So let's square that with, the current rules, because a lot of what you discussed before was that, these products would be available ex-US and not focused on the US. A is that because the current rules in the US are too limiting. And B, as you look to launch this, how do you envision this sort of ex-US offering and structure? Are you planning to KYC and geofence this and say these products are strictly not available to users? In the US, are you planning to make the blockchain itself permissionless and the assets on them permissionless? What do you envision the structure is? Based on the current rules, obviously I know that you hope the current rules evolve, but what's the structure that you see this going live?
Yeah, it depends on regulatory maturity in each market. High level, what we expect this to look like is Robinhood would get exposure or positions to a variety of private companies. And then we would package them up and make them available to retail, either directly where applicable or in other vehicles that may be diversified, depending on what's permissible in different markets. So right now, I think there's a good analog with stable coins, right? Stable coins are sort of the original tokenized asset. And the way it's evolved is in the US, where capital markets and financial rails are relatively robust, people are using ACH, debit, credit to move money around. But stable coins have become a great delivery mechanism for US dollars outside the US. And I think you'll see the same sort of situation for tokenized versions of US equities. In the US, where capital markets are pretty robust, the uptake might be a little bit slower, but outside of the US, where access is a little bit more challenging, the tokenized versions will develop into the leading vehicle for exposure to US assets. And it's hard to make predictions about how the US exactly will shake out. Tokenization isn't broadly permissible as a retail vehicle today, but that might change. And I think if it changes, the biggest and most immediate sort of visible improvement in quality of life for retail investors will be exposure to private assets, because tokenization solves the liquidity problem. It used to kind of be a problem, even if you were able to get your hands on private assets. You have restrictions for how to sell. Pricing was a little bit unclear. There have been marketplaces and different secondary markets that have tried to form, but they had to build their own market, and they had a hard time getting enough volume of buyers and sellers. But suddenly you plug in, the global crypto networks, and the liquidity problem becomes much less severe. So yeah, I think that's going to be the biggest change if regulations mature and it's allowed to happen.
Yeah, I think, I hear you on tokenization being kind of an access story. Stablecoins, I think, being a great example of that so far. I think I look at other companies in the crypto space that are also going on chain to sort of accelerate go-to-market and improve access for financial services that might otherwise don't be able to. Like I look at Coinbase basically offering Bitcoin lending through Morpho, through their wallet product, or Phantom, offering hyperliquid perps through the product directly, and they are able to sort of accelerate their go-to-market through this kind of self-custody model where they're interacting with a DeFi application on chain, but they themselves are just a wallet or a provider. Is that something Robinhood is looking at all, or have you thought about? Or how do you think about those companies' kind of approach to this?
Well, we have the Robinhood wallet, which has been growing in an accelerated way, and we're continuing to invest there. The Robinhood Chain obviously is another component. And yeah, we think that with tokenization, particularly overseas, but hopefully eventually in the US, we can offer all kinds of financial products that have fundamental utility, starting with stocks and private markets, but eventually extending to the wide breadth of what we have available. We want to make those available on chain in a permissionless way. And I think we have an advantage there because we're kind of the only financial services platform that has large scale in both crypto and traditional assets. And if you look at tokenization, it's where those two intersect. So you still need a traditional financial services company to custody all of the TradFi assets in order to mint and burn them and deliver them on chain. So there's kind of two axes of vertical integration. There's the blockchain one where you can offer customers better pricing if you own the chain, the wallet, and kind of everything in between. But also if you own the custody layer of the traditional assets, it again gives you not just more control, but more ability to offer lower pricing and better economics to customers.
So actually, I have a question for you. What do you think happens to like transfer agents, DTCC, et cetera, in a world where like 10% of stocks move, 25%, 50? Because like it's kind of an interesting question of like if this structure ever gets to higher volumes than the current underlying, like does that like flip the kind of story on like how you currently deal with kind of being a broker, dealing with transfer agents, dealing with a whole like ecosystem of people whose websites have no 2FA?
Yeah. My guess for how this shakes out will be that it'll be similar to an ADR or like a ETF custodian, where you'll still have the traditional assets that are custodied at a TradFi custodian, and you'll have traditional trading of those assets on public exchanges whenever you can get a better price there. At least this is how our system is designed, as we outlined in our event in Cannes. But then there's also going to be secondary trading of the tokens as well. And at first, the value prop there will be the tokens can trade when the traditional markets aren't open. So weekends, holidays, and over time, we'll see it expand from there.
So Vlad, going from 24/5 to 24/7, like that story about, okay, stocks can trade now on weekends and when markets are closed, totally makes sense to me. And I think that feels kind of inevitable, especially given the way that Robinhood's core products have always evolved in that direction of making everything easier for retail. This private market story is the one that I find really fascinating. And I heard from your answer that you think that the private market side is actually in the long run the bigger story than just, okay, things are maybe more efficient on the public market side. What strikes me, being ourselves investors into private companies, there's long been this kind of push and pull between private markets and public markets, which is that, of course, companies are being private for longer and longer. You mentioned, look, you might lose your job to OpenAI. Maybe at least you can own a little bit of OpenAI stock. But it's very clear private companies, despite the fact that they might want the rules of going public to be easier and for it not to be as much of a cost, they also really don't like, and I feel like they've become smarter and smarter about this since the Facebook days. They've become smarter and smarter about not allowing secondary market transactions, not allowing SPVs to trade. So there's a lot of things that I'd imagine, even just in response to this adversarial game, essentially, that's being played with private companies of saying, hey, as long as there's enough SPVs out there, Robinhood can find one of these SPVs to go tokenize its ownership in this private company and then allow retail to get access and to get liquidity. What do you think is the endpoint of that game? Because at the end of the day, the company has the ability to say, hey, we don't like what you're doing, screw off, or we're taking you off the cap table.
Yeah, two things. One, I think it's important for the tokenization mechanism to work well without necessarily the opt-in of the company. That way you
how can you do that? How can you do that?
Well, I mean, we demonstrated that by these things that you've outlined, like if you get indirect exposure in an SPV as an institution, you can then have the traditional assets in a bucket essentially and tokenize them or otherwise make them available to retail by other vehicles. So for example, when you're in the public markets, it would just not work if every company had to approve every shareholder or every transaction. So obviously, if the company had to approve that in the private markets for tokenization wouldn't work. So I think it's important for the mechanism to work without having the companies actually be in the loop. And not just because they might not want it, but also because they probably don't want the extra work or the extra steps.
I think a lot of it is that they actually don't want it. I think they actually do not want a liquid price to be set every day. And I'm sure you probably understand the reason why, because before Robinhood was public and post being public, I imagine you feel very much the pressure of public markets and the fact that there's a stock price that moves every single day in response to what you're tweeting, what you're saying, what you're doing. Private markets very much love the illiquidity of markups. And they love the opacity of not being able to say like, oh, hey, we're actually, the company's worth less than it was yesterday.
Yeah, I mean, a lot of people bring this up as an argument, like, oh, when you were private, you probably would have not wanted this. I think there's lots of private companies, each have slightly different things that they care about. For me in particular, I don't think I'm a great example because I would have been fine with it, clearly. But there's also lots of companies that are interested in doing this. And it's not simply companies that can't raise money other ways, but it's companies that understand the value of retail. So the optimal scenario would be, we work with companies and they understand the value of what we're doing and they make it available to retail at earlier and earlier stages, culminating with retail actually being a vehicle for company formation. So you have companies being formed at seed with retail investors being a big component of the cap table from the earliest possible stage.
It sounds very crypto inspired.
Yeah.
It sounds like ICOs.
But in this model, Vlad, it's the companies opting in this version where they're giving you, because they're excited about it, because they think that having a ton of retail on the cap table is a good thing. They're making themselves available while they're still private, versus companies that are being permissionlessly taken public while they're still private against their will, right? So as I hear this, it's opt-in, not we can do it against.
Well, it sounds like some are opt-in, some are, hey, we're doing this. Guess what? OpenAI is too important for it not to be accessible to retail.
I think there's a slight nuance here, which is it depends on who the customer issuing stock is. So I think if you're talking about early stage, the customer of what's really capital as a service is the entrepreneur. It's someone creating a new venture. They want to raise capital, and that capital is primary in nature. And obviously, if you're an entrepreneur raising capital on a primary basis, it's opt-in. As you get later and later stage, the customer base shifts and it becomes senior executives and employees and early investors seeking secondary liquidity. And I think it's worth debate how much freedom employees and early investors should be given to sell their stock, right? I mean, people have different views in them. Obviously, some companies lock that down quite acutely, others don't. And in the cases that they don't, investors can sell their shares without the company being in the loop, right? Without the company opting in. So every case is a little bit different. Hopefully you guys can appreciate the nuance. But do I believe that contractually every employee and early shareholder should require the company's opt-in? I wouldn't say that. I mean, that's sort of a legal decision that the company can make.
But I'm less focused on, okay, who are you getting this from? Is it an employee? Is it some early investor? I trust that at every cap table, there's somebody who the founder doesn't really care if they get liquidated because, whatever, it's fine.
But there's also people they do care about.
There's people they do care, and I'm sure Robinhood is not probably getting their arms around those shares anyway. The question I want to get at, which I think is more interesting, and it's kind of very much what you pointed at, which is Robinhood's story has always been this kind of Promethean story, which is that we kind of bring the flame from on high down to give retail investors access to any financial asset, any stock, any financial instrument that normally you're not allowed to touch. Now you're allowed to touch them. And part of what this story does, I think I appreciate the virtue of the story, and it's very aligned with the kind of crypto ethos. But at the same time, it also collapses the distinction between public and private companies. Because the whole point of creating this entire regime of all this shit that you have to do when you're a public company is to make it so that there's this big boundary between public and private companies, and presumably it's all grounded in investor protection and clarity in markets and blah, blah, blah. And the idea is that, okay, if the company's private, we don't really have to worry about that. We can more or less let them kind of run amok and just get away with murder. Relative to if they're a public company, then okay, everything has to get pre-cleared. If retail is getting access to all of these stocks, like not all of them, obviously, but like attractive companies that people are interested in, and you can buy it alike for public and private companies, this, from a social perspective, doesn't it kind of erode the entire meaning of the regime that we've built around public and private companies? Like, what do you think the regime ought to be instead in the world that you're trying to enact?
I don't think it erodes it. I don't think anyone sat down and constructed a system where, 80% of individuals in the US can't have access to these types of appreciation opportunities proactively. I think it's kind of evolved incidentally, right? It started as investor protection. It started as making it easier so that companies could operate and get started without disclosure requirements. Sure. But what's happened in the past few decades is it's gotten harder and harder for companies to go public. There's just more onerous requirements on that process. Simultaneously, private markets have become easier to access for a lot of companies. There's more VC firms, more private equity. So access to capital has become easier that way. And the combination of those two things has led to less companies going public, or when they do go public, it's sort of like at very high valuations. And I think collateral damage of these things were that retail investors don't have access to these opportunities. So I think we can probably address some of the concerns while also giving retail investors access to these great opportunities.
Actually, so to what you're saying, there's actually this very funny thing in crypto microstructure that's happened repeatedly that sort of reminds me of this. So like, I sort of view what you're describing as like this like inevitable tug of war between the private and public markets over like who gets to like have a first earlier allocation. And in crypto, oftentimes what you see is like private rounds in crypto will have some retail syndication when there's sort of like a bull market. So we saw these platforms like Echo or Legion where like companies would raise private rounds and then like syndicate some fraction like AngelList SPV style to purchasers. And then somehow that stuff grows too quickly relative to like the true growth rate of the companies. And then you see this flip where everyone tries to go fully private and like stop syndicating. So I think the interesting thing is crypto sort of replays this type of thing at like a faster time speed, right? It's like you can see 20 public market cycles in like an hour of crypto sometimes. And there's kind of this interesting question of like, if you cross the chasm of this, will there kind of be like a back, like to Haseeb's point, like what is sort of the reversal? Or do you think this is like a true one-way function? Like there's no inverting it?
Yeah, it's really hard to predict how this will shake out. What I'll tell you is in crypto, I think the difference is that we haven't been allowed to connect crypto assets to companies, to company equity and things that have fundamental utility, as I like to call it. And what you see happening is as a result of that, downstream of that, you have a lot of activity in meme coins exactly because they're disconnected from fundamental utility, because that's what's allowed. And there's a lot of talk about investor protection and protecting these folks from making poor investments, losing money. But we are now in a world where you can invest in a meme coin to your heart's content, but OpenAI and SpaceX are deemed too risky, which I think is just a bizarre, perhaps unintended outcome of the current.
Absolutely it is. Absolutely it is.
Well, actually, speaking of you were talking about the idea that access is sort of limited. How do you feel about the digital asset treasury companies? Because they're sort of like this perfect hybrid of all the things you said, where it's they're vehicles that are encapsulating assets that are not in a company format, but now you can buy them as a stock. I'm kind of curious, what's your sort of how do you feel about these kind of weird wrappers? Because there are also actually for private stocks, there have been a few ETFs that closed-end funds that are we own a bunch of Stripe stock. If you buy our ETF, you basically own pro rata share in whatever closed-end Stripe stock we bought. So how do you view these kind of weird vehicles that exist, and what do you think about the fact that they've grown so much in the last year?
Yeah, I mean, without actually talking too much specifically about different investments, I tell you that I believe in free markets, so that if someone lists an equity or other type of instrument or even a cryptocurrency and it's compliant with the rules of the law, it should generally be accessible for retail. And I think that the beauty of free markets is that you let the market decide, right? If a product is attractive to consumers, over time, the fundamentals do play out, and you end up sort of getting to a market solution to some of these questions. So I wouldn't necessarily give you a bull or bear analysis of every treasury company or closed-end, open-end.
I mean, if you did, it would be hilarious, because I would restrict you to one emoji only for your review.
Yeah, but I think that it's from my perspective, we want to allow access to all types of financial assets and transactions. And we think Robinhood can be the place to do that safely in a compliant manner, also with a great user experience and at low cost. So, when we have the opportunity to list stuff,
Yeah. I'm realizing that we can't get you to actually talk shit about digital asset treasury, so that's fine. What interesting thing here is that Robinhood traditionally was basically a place to trade mostly U.S. equities. And over the last couple of years, more and more of the business, the revenues and the earnings have been attributed to crypto. And at the same time, one of your biggest competitors is Coinbase. Coinbase has been traditionally a crypto business that now is talking about starting to add equities, kind of almost like this sort of convergent evolution, is that there maybe is some kind of deeper structural shift taking place where the newer generation, sort of millennials, Gen Z, and then Gen Alpha, that the places in which they're going to trade are ultimately going to look more and more like the union of crypto and traditional finance. How have you thought about the way in which Robinhood is a business? I have to imagine that you probably weren't expecting crypto to be as explosive as it ended up being in the growth of your business. How have you changed your perception of what Robinhood is supposed to be with how much crypto has grown as a portion of your business within the last few years?
Yeah, I think the underlying thesis for Robinhood has remained consistent, right? We want to be a financial super app that helps you handle all of your financial needs. So custodying any asset, conducting any financial transaction. And you point out crypto as a percentage of our business has become significant. I think last quarter we had just under $1 billion in revenue. Crypto was 20 to 30% of that. As crypto technology becomes more and more infrastructural and Robinhood becomes more global, I think the delineation between the two will blur. So for example, if you have a tokenized stock transaction, or we're custodying stock tokens or private tokens, do you put that in the crypto bucket or kind of the TradFi bucket? And I think anytime you categorize stuff in this way, you end up having to deal with these edge cases. For example, technology as a sector is becoming less and less relevant as every company now. I mean, it's kind of silly to think about non-technology companies because even they have to use technology. So I think over time, the distinction will become less material. And if you're a customer of Robinhood, you'll probably be using crypto more and more without it being front and center in your experience. Of course, if you want to buy Bitcoin, it's very clear that you're investing in crypto as an asset. But if you're getting a tokenized asset, crypto is really an infrastructure technology, and it's sort of a delivery mechanism to the instrument that you end up wanting to get.
Actually, and sort of related to this question about the juxtaposition with kind of Robinhood starting with stocks and adding crypto, Coinbase going the other way, is, I think the other difference, I guess, between two businesses has been like the institutional / infrastructure side of like owning the full stack of custody and staking and other aspects in order to support institutional usage versus retail usage. Do you view that as things become the everything market for both crypto and non-crypto, that you'll have to own more of the infrastructure directly than kind of like public markets? You can never really own the full stack, right? But in crypto, it's kind of weird. Single entity can kind of own the full stack for their end user. And so like, do you see yourself owning more of that? How do you like view that? Because like, I do feel like that's a big shift, right? If say tokenized stocks dwarf the volume of your traditional stocks.
Yeah, I think that I see our business evolving with 3 arcs, right? One arc is sort of like short term, then we have a medium term one, and then sort of a 10-year long term arc. The first one is really just being the number one platform for active traders across all assets, crypto, stocks, options, futures, every asset that we offer. The second arc, which is sort of like building right now, is us being number one financial super app for our customers. So all of your wealth is in Robinhood and all of your transactions go through Robinhood. So the first 2 arcs are like retail only. Basically, we think we can do that without actually vertically integrating completely and serving businesses and other institutions. But what happens is, by virtue of us building these capabilities, things like 24-hour trading, rock bottom margin rates, tokenization, we build products that are attractive to businesses and institutions. If you're an institutional investor, you also want 24-hour access to markets. You want crypto and traditional assets in one place. You also want the lowest possible margin rates. And so that plants the seeds for compelling B2B and institutional offerings. And I think if you look over a 10-year horizon, our business ex-US could be even bigger than US. And business and institutional could also be even bigger than retail, which I think makes the opportunity. I mean, I get excited when I think about what we can do in the long term, because we're just like at the very, very beginning. And I see multiple ways that we could 10x this business, and we can kind of pursue multiple of those vectors simultaneously.
So you guys are now in a position of both being a contributor to the crypto ecosystem with Robinhood Chain and all the stuff that you guys are doing there. You've also, in some sense, also been on the other side of like, okay, you're working with Arbitrum and you're getting a sense of what we as an industry have built. And I'm sure you probably have some sense of like, hey guys, this part of what you guys built kind of sucks and like we really use some improvement. We have a lot of founders who listen to the show, a lot of entrepreneurs, a lot of builders. I'd love to just get, Vlad's feedback. What do you feel like the crypto industry should be doing better? What have we under-delivered on, and what would you like to see more of from builders in this space?
Well, I think that I don't really view it as, I'm a customer of the crypto industry. I do think that we're a very active participant. I mean, we're one of the largest companies in crypto. If you look at market share and sort of like volumes and revenues, particularly in the US. And the thing that I felt was missing was that crypto and the financial system have basically been two separate worlds with like minimal connections in between. Stablecoins being kind of a recent counterexample of, okay, they are starting to merge. But my approach to that wouldn't be, hey, you guys should go fix that. Like we're in the arena trying to improve that, and leveraging our capabilities and the things that we're great at to make that better.
Surely there is some like time component to that. Like there was, okay, hey, Robinhood, we're doing this Arbitrum L2 now. Maybe you wanted to do it several years ago. I'm sure there are things where you're like, man, I would love to do something today, but the tech isn't there, or this product suck, or there's not enough liquidity. I mean, even kind of these stuff around these private market assets, or we can also talk about some of the prediction market stuff that you guys are doing. Feels like maybe now is the time. What is the thing where you're like, I wish now were the time, but we're not there yet?
And part of the context for this is that we spend almost every episode bitching about the industry, so that's why we're trying to get a little bit of that.
Feel free to
too.
Talk shit. Yeah.
Vlad Unchained.
Yeah, I think that. I mean, there's been some talk about AI agents and whether AI agents are going to be paying each other with crypto to conduct transactions. I think there's also real world AI, right? You're talking about robotics, medical devices, things of that nature. And are real world AI agents going to be paying each other in crypto, and kind of what that looks like? So I think we're probably one step away from both of those things, and two steps away from sort of like a intersection of crypto being used as a tool of agentic commerce.
Okay, so taking the AI point that you just made, one of your, side quests is you're working on this company called Harmonic, which is, if I understand correctly, you're building a foundation model that can basically verify mathematics using lean and theorem proving in order to verify the answers that it's generating, something like this?
That's right.
What's the... First of all, how do you have the time to do that as you're running a company? What's your level of involvement there? And tell us the story of like why this, why that?
Yeah, so I'm chairman of the company. Again, this is an entirely separate company from Robinhood. So I don't have an operating role, but I am the founder, and I care about it quite a bit. And actually, a couple of weeks ago, Harmonic announced that our model called Aristotle reached gold medal level performance on the International Mathematical Olympiad. So if you guys are familiar, this is a very, very hard mathematics exam. And off-the-shelf models like GPT-5, Grok, the others get like barely even one complete question, right? Like they do very, very poorly. And part of the issue is that usually these problems require a spark of creative genius. And if you don't find it, you're not going to solve the problem. The other is that they require like 10 logical steps. And if one of those steps is wrong, then your proof is wrong, and you don't get the answer either. So you have to be both creative, and you have to make sure that every step is correct, because hallucinations in this case kind of compound. So it's a great demonstration of the technology. And in fact, we were we did this in a formal way. So you mentioned lean, the theorem prover. So we produce formal proofs of all of these results, which means a human doesn't have to validate it. You can pass it into the lean kernel, and the lean kernel checks that every step of the proof and the result is correct. And now you might ask, like, what's the application of this? We call it mathematical superintelligence. The application of this is that you can not only use AI to just create output and answer your questions, but you can use AI to validate that the output is correct up to a very, very high standard. So you think about all this computer code that AI is generating right now. It's kind of turned the job of an advanced software engineer from writing code to verifying AI generated code. And if it's like a front end UI, it's pretty easy to verify. You could just look at it and make sure that it looks like the spec and what you intend. But if it's a back end system, or if it's a smart contract, particularly if the consequences of failure are losing hundreds of millions of dollars, humans have to verify it. And I think that kind of creates the market for formal verification. So yeah, we're excited to build that. I think the applications aren't just math, but it's really also all software and even hardware too.
So you think this is a better path to building software engineering agents like what Anthropic is doing? You're like, hey, having this foundation of theorem proving and this mathematical undergirding is necessary to get to real AGI.
I think it is a better path. And also it's inevitable, right? Because if you're in a world where AI is producing voluminous content that's just too much for any one human to read, we need another way to actually make sure that it's correct. Two things. We need to make sure it's correct. Also, it doesn't have to be in languages that humans necessarily understand because humans aren't even reading it anymore. So I think the entire substrate changes, and you have to think about how can humans really, really quickly verify that it's doing what it's supposed to be doing without having to like go through line by line.
So I actually have two questions for you related to this, which is one of sort of the aesthetic criticisms of formal verification is like, you dropped out of math PhD. You probably got into it, as a similar dropout. You got into it because there was some aesthetic beauty to some proofs, right? You're like, this particular area was just like such a beautiful theorem, or like how succinctly it was proved. And somehow math has always historically had this like trade-off between aesthetics and computation. They've never kind of like coexisted. But oftentimes maybe the lean proofs that are generated might look like, those, the coloring theorem proofs that are like really ugly relative to like the like indirect ones that we have. So how do you think about like preserving aesthetics?
Have you seen Aristotle's lean proofs?
I've seen one. So like I haven't seen like the compendiums.
Yeah, I mean, I find them very beautiful, actually. And so the thing is, converting from a lean proof to natural language is actually a pretty straightforward problem because you can almost even do it mechanically. Like you could look at the functions in lean and their descriptions, and you can very easily go from something that has more detail to a more descriptive sort of like English exposition of it. I think it's particularly easy for lean relative to other formal languages in the past, which I think in part has led to it being popular, not just for AI, but for mathematicians that are trying to formalize stuff. So there's that. The other way is the difficult part. Getting an informal proof and formalizing it is actually a lot of work. And there's a huge formalization initiative right now being run by this professor, Kevin Buzzard, in the UK at Imperial College. He's trying to formalize Fermat's last theorem. And this is an initiative that's like gargantuan in scale. It's sort of like hundreds of mathematicians, multiple years to formalize this result by hand. So you can kind of tell the difference in difficulty that way.
Well, I guess the last question that I wanted to kind of go to is like, what non-Millennium Prize problem would you want solved? Would you want kind of, Aristotle or successors to solve? Like, because Millennium Prize problem is like an easy answer, right? It's like, okay, yeah, obviously, like people have said these are, Riemann hypothesis and P is not equal to NP are worth thinking about. But what is your sort of pet problem, and like which thing do you think would be like if you solved it, you're like, I have succeeded?
Okay, so not the Riemann hypothesis.
It's too obvious, right?
Too
like,
obvious.
I feel like it's too obvious.
Because I do like that one. I think like a benevolent HAL 9000 would be pretty cool. If we want to, I would love to build like the logical core and the control center for a spacecraft, and obviously not have it go haywire and try to take over.
I don't know if that's the example you want to give people.
That's
like,
a proof
of
of
That's why I said
spacecraft.
it's a benevolent
Yeah,
HAL
yeah,
9000.
yeah, no, of
Obviously,
course.
we need good control systems that are reliable.
Ostensibly benevolent. Benevolent. Okay.
But
got it.
will it be able to trade stocks on Robinhood, or will any of this outcome of this work?
To the
be able
moon is
trade
going to be
stocks?
much more literal now.
Well,
jeez.
I think that the initial goals were obviously quite separate, but I think there is overlap. So, for example, smart contract verification. If you think about a smart contract, it's a relatively self-contained piece of code running on Solidity or Rust or what have you. There's certain things that we want to make sure that, hold, like the smart contract doesn't halt and you can't double spend and all those sorts of things. And actually the consequences of that failing could be hundreds of millions of dollars, as we've seen. And right now, if you're a smart contract firm, you're basically forced to go through this manual auditing process where you pay some firm, hundreds of thousands, even millions of dollars to comb through it. So there are examples in the crypto space where I think formal verification, once it becomes practical, could be very, very powerful. You could look at any query where you actually have to do complex mathematics, if you're computing margin or options pricing. So there are lots of examples in our industry of software where the consequences of failure can be quite severe. So I think financial services, along with healthcare, automotive, aerospace, robotics, they're all sort of like ripe for formal verification.
Well, I'm sure
So no
we've
math
now
problem.
lost
Sad.
the vast majority of our audience is totally lost. But I will say, Vlad, I'm very excited to be able to buy tokenized 0DTE options on Harmonic and bring them on chain as soon as they're ready. So we're up on time.
No.
Thanks
You're
so much.
not just buying the option. You're getting a proof that the Black-Scholes price was computed
Oh,
correctly.
good. Yeah, that's right. You get a lien proof alongside your purchase. Vlad,
It's like a
appreciate
Happy
you coming
Meal toy.
on and sharing your perspective with us. It's great to have
Thanks
you.
for having me.
Excellent. All right. Till next time. Thanks, everyone.